Good morning, treasurers. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 9th November 2020. In the international market, US Treasury yields climbed higher on Friday, lifted by better than expected October unemployment data. The October unemployment rate fell to a lower than expected 6.9% from 7.9% in September. Although a 638k increase in non-farm payrolls was the smallest gain since the jobs recovery started in May. On the US presidential election front, Joe Biden has now won 290 electoral votes where 270 was enough. Republicans still leading in Senate on 48 seats with 51 to win. Hence, with the enthusiasm of Democratic win for the president, better than expected unemployment data, US 10-year climbed to 0.83 percentage points and 30-year at 1.6%. With larger than expected stimulus to be announced soon, we expect US 10-year benchmark yields can inch towards 1%. In the crude oil market, crude is now trading at $40.22 per barrel, and we are again bullish on crude as US election clarity and not so out of control COVID-19 situation in US and Europe is raising hopes for crude demand in the near future. Crude's short-term range is seen to be $39 to $42 per barrel right now. In the currency market, dollar index is at 92.17. DXY's today's range seems to be 91.75 to 92.47. 91.75 acts as a very crucial support below which the dollar index can fall to 90 if the bear pressure continues. The clarity on the US president hopes for larger stimulus, better than expected US unemployment data is raising the case for dollar shorts. USDCNY or Chinese yuan has now climbed back to 6.61 from recent 665. USDINR with a high of 74.21 closed at 74.13 on Friday. USDINR's range for today seems to be 73.85 to 74.05. Remember, we at Night Research were bullish on short USDINR trade near 74.70. We still feel there is some more juice left in this trade, and USDINR will inch towards 73.80 levels very soon. For majority of the clients who took USDINR short trade at 74.70 are all squared off and profits have been booked. In the domestic market, government bond prices fell on Friday because market participants were disappointed by the auction results, with RBI setting up the coupon for the new 2025 bond at higher than expected level. The new 2025 bond coupon is set at 5.15, that is 515 GS 2025 is the new 5-year benchmark. Remember, 2035 bond coupons were also set 3 basis points higher than expectation. This clearly shows the weaker demand from investors at this level, and we have been vocal on the fact that RBI has suppressed the yields artificially. Though there is no reason to fight with RBI in yield management, but the 10-year RJ SDL closing at 675 in the last SDL auction, new 2035 coupon set 3 basis points higher than the wider expectation. Similarly, 2025 coupon set at 515, whereas the wider expectation was below 510. These are all the examples which clearly showcase the lack of demand from the investors in the dated securities. We strongly advise our clients to offload SDLs at 640 levels, as you may be able to buy them later at 670 or more in the few months. 577 GS 2030 is expected to be trading in the range of 585 to 589 today. Exit trading ranges will be available once the market opens by 10 o'clock. If you wish to optimize your bank treasury, help the profitability of your bank in this tough operating environment, make your treasury future growth ready, you may contact us at 9930307466 or research@nightfintech.com.